Hi folks, how you doing? This is Iqbal with Financial Analysis. Today I'm going to talk about SMCI, Super Microcomputer. Past few days people are talking about SMCI. Some people are confused about its future direction. So I thought to make a video to give some guidance to folks based on the latest financial data on how high or how low SMCI can go in the future so people can make the right decision and do not lose money. Now, let's get a deep dive into financial data. I made this table you can see in your screen. I got this data from multiple sources. I captured revenue, income, profit margins, P ratio, and debt to equity ratio, and the free cash flow per share as well. Starting with the revenue, latest quarter and comparing with the previous quarter, latest quarter is 3.66 billion, much better than the previous quarter and also the previous quarters. Okay, so revenue going in the right direction. Net income is also good, 0.30 billion in the latest quarter, much better than the previous quarter and also better than the previous quarters. Okay, so net income also going in the right direction. Talking about the operating profit margin is 10.14%, the latest quarter, higher than the previous quarter, and pretty much aligned with the historical average. So no problem there as well. Gross margin percentage right now is 15.40, little lower than the previous quarter, but overall it's pretty much aligned with the historical average. So no problem there as well. EBITDA earning before interest, taxes, and depreciation margin percentage 10.24%, higher than the previous quarter, and overall pretty much aligned with the historical average. So I don't see a problem there as well. The P ratio right now is 20.47, much higher than the all previous quarters. We're going to talk about P ratio in a bit. Okay, free cash flow per share right now is negative the latest quarter, but the trend is sometimes up, sometimes down, right? But the free cash flow per share does not impact the stock price much, so we can ignore this for now. Debt to equity ratio 0.12 overall is very good, and that tells that SMCI is able to manage their debt very well. Okay, now let's talk about EPS. This table, I have the latest EPS and all the previous quarter as well, right? The latest number, actual 5.59 versus the projected 4.93, the positive surprise, and also previous quarters are a positive surprise with the exception of just one quarter. Talking about the future projection, going up, so EPS is very healthy and also going in the upward direction. That's a good sign. Now, the most important thing, the P ratio. Let's talk about it. So I made this table. I captured the EPS forward for next 4 quarters and EPS TTM trailing 12 months, last 4 quarters, and also put the adjusted close of Friday and for the previous days so we can compare. And also I calculated the P ratio based on the TTM and also based on the forward EPS. In this analysis, we put more focus on P ratio forward, okay, because that gives a better determination of the stock price. Right now it's 32.06 based on the Friday closing. Let's compare with the previous quarter, it makes sense or not. The previous quarter listed here is the forward P line. So the way I designed this table, I'm capturing the forward P based on the day earning was released, just to be consistent. Okay. So last previous 4 or 5 quarters, the average is 14.55, and right now it's 32.06. So forward EPS is way too high. Okay. Now let's make some determination of the stock price. So I did some calculation, minimum, average, and maximum stock price, and I'm going to show you how I made those calculations. Starting with the minimum stock price, the very first factor is H4, that is the EPS forward. EPS forward, I'm going to multiply with P29, that is this guy, mean minus 2 standard deviation. Basically, I'm trying to calculate the mean for the last 4 quarters of the forward P. The last 4 quarters, the forward P average or mean was 14.55. In order to calculate the minimum value, I'm subtracting it with the 2 standard deviation. So mean minus 2 standard deviation of the forward P for last 4 quarters is 5.62. So I'm going to put here 5.62 and then going to multiply with another factor, that is P38. The P38 is this guy, minimum, average, and maximum. So basically, I'm trying to calculate the earnings surprise for each quarter, okay, for last 12 quarters. So this is the value, okay, how I did the calculation. The earnings surprise for the latest quarter is actual minus projected divided by projected, okay. So if I take an average, the average value of the earnings surprise for the last 12 quarters is 0.21, the minimum value is 0.04, and maximum is 0.55. I ignore this negative surprise because it will mess up my calculation. So putting the minimum value here, 1 plus P38, that is this guy, 1 plus 0.04. That gives the minimum stock price 146.30. Now calculating the average, same thing, H4, that's the forward EPS here, and then I'm going to multiply with Q29. So that's the mean or average value for the forward P for last 4 quarters, and then I'm going to multiply with the earnings surprise average, that is this 0.21. Okay, so 1 plus Q38, 1 plus 0.21. So that gives the average stock price 442.91. For the maximum, same thing. I have the EPS forward, and then I multiply with the forward PE, the maximum, mean plus two standard deviation. Okay, so that gives the maximum forward PE. And then I'm going to multiply with the maximum surprise, earning surprise, that was 0.55. So when I multiply these three factors together, that gives me the maximum stock price for SMCI is 909.78. On Friday, it closed at 803. Overall, looking at the minimum, average, and the maximum value, it tells me that SMCI current stock is still overpriced. Okay, so the drop on Friday makes sense because Thursday touched 1,000, even more than the maximum price. So there was some correction due on Friday. But still, 803 looks to me high, and I guess it should come down more. So at this point, it's very risky to buy SMCI, in my opinion. Overall, if I summarize today's analysis, financials going in the right direction, EPS also going in the right direction, even going up in the future. That's very healthy. But the problem is the current stock price is high. Okay, so this is very risky to buy SMCI at this point. And that was all about financial analysis on SMCI. I hope you like this video. Thanks for watching. Talk to you more next week.